When most people think about investing, they usually think about the basics: stocks, bonds, mutual funds, ETFs, or maybe their 401k. That is the traditional investment world. But there is another part of the market called alternative assets. And that is what AltsIQ is designed to help you understand. The simplest way to explain alternative assets is this: alternative assets are investments outside of traditional stocks, bonds, and cash. Think of investing like a toolbox. Stocks are one tool, bonds are another tool, cash is another tool. But sometimes investors want more tools in the toolbox. That is where alternatives come in. Alternative assets can include private equity, venture capital, private credit, real estate, infrastructure, hedge funds, commodities, and other specialized investment strategies. Let's break those down in plain English. Private equity means investing in companies that are not publicly traded on the stock market. So instead of buying shares through a brokerage account, investors invest in a private business. The goal is to improve that business and sell it for more. A simple way to think about private equity is buy a business, make it better, sell it later. Venture capital is a type of private equity, but it focuses on younger companies and startups. Think of venture capital like planting seeds. Not every seed becomes a tree, but the ones that do can become very valuable. Private credit is private lending. Instead of a company borrowing from a bank, it borrows from a private investment fund. That fund earns interest on the loan. The simplest way to think about private credit is the investor is acting like the bank. Private credit has become a major area of growth. Real estate is one of the easiest alternatives to understand. This can include apartments, office buildings, warehouses, or data centers. Investors may make money from rent, property values increasing, or both. Own property, collect income, and hope the property becomes more valuable over time. Infrastructure means investing in the physical systems like airports, power grids, and cell towers. Think of it as the plumbing and wiring of the economy. These are assets people and businesses rely on every day. Hedge funds are investment funds that can use a wide range of strategies. Some invest in stocks, some focus on interest rates, currencies, commodities, or global trends. A simple way to think about hedge funds is professional investors with a bigger playbook. Then there are commodities, raw materials like oil, gold, and wheat. These are important because they are tied to the real economy. Oil affects energy prices. Wheat affects food prices. Gold is a store of value. Copper is for construction. Commodities are basically the raw ingredients of the global economy. There are also more specialized alternatives like art, music rights, and digital assets. These require more research as they can be harder to value. So why care? Because alternatives may behave differently than stocks. They help with diversification, income, and inflation protection. But here is the important part. Alternatives are not automatically better. They are not magic. They are not always safer, and they are not right for everyone. Many can be complex. Some lock up your money for years, have higher fees, or are less transparent than public investments. That is why education matters. Before someone invests in alternatives, they should understand the basics. What is the asset class? How does it make money? What are the risks? What are the fees? Can you get your money out? And how does it fit into your portfolio? That is where AltsIQ comes in. Our goal is simple: to help people understand the world of alternative investments in a clearer, more practical way. Information is often scattered or written for insiders. AltsIQ is built to make intelligence easier to understand, compare, and use. So when you hear the phrase alternative assets, keep it simple. Alternative assets are investments beyond traditional stocks and bonds, and that is the world AltsIQ is designed to help you understand.